Hey, how's it going? It's Nick. It's been 1 day since Elon has announced a 9.2% ownership into Twitter. The stock has jumped from $40 to a little over $50, which is almost a 30% increase in 2 trading days. Now, what the average trader thinks about doing in the situation is joining the momentum of the trade and going long. They hope that they can capture a few more percentage points higher. However, this is a huge mistake. For one, the price has already jumped up almost 30% and the stock is already overbought from a couple days ago. This means that there is a much higher chance that the stock can come crashing down from 30% versus jumping up to a 40%. So in this case, you don't want to go long. Instead, you want to go contrarian and have a negative delta position. What I have done is sold a short call at the $60 strike and received a $270 credit, and this is my thought process. Again, the stock has already increased almost 30% and is currently hovering around the $50 mark. For the stock to get to 60 or even farther, the percentage increase from $40 will be a 50% gain. Now imagine that. It's very unlikely, to be honest. With a stock like Twitter that already has a $40 billion market cap, and I'm talking B with the capital, it's hard to keep the buying pressure up. This is why I feel like it's different than entering into a short call position in a stock such as GameStop or AMC. There is very little that a company or that an investor can do in order to pump up the stock price even more because it's already at a high market cap. So it's not as easily manipulated with a small amount of capital. So this is why I entered into the position. My goal with my premium collected is to collect 50% in profit. So this would be about $135, and the capital required to keep this position is $725, which means that my total return for this position is 19%, assuming that the price goes down. Compare that with the purchasing power of $725 worth of long stock. For one, you'd probably lose that money because instead of hoping the price to go up, it'll probably go down since it's already up 30%. Second, if the stock were to climb past $60, you would only have a gain of 50%, assuming that you invested right at the $40 mark. And let's be honest, nobody really knew when Elon Musk was going to buy Twitter. Even if you invested the money at $50, your gain would only be 25%. But that's assuming that the stock actually climbs up to $60. It is more likely that you gain some money if you actually invest into a short position on the option side. Outlining the facts above, I think this is the best position, and I'll let you guys know how this plays out in the future. If you guys like this type of content, please feel free to like, comment, and subscribe.